Hi guys, welcome back to Day and Night Forex YouTube channel, and in this video we have some interesting knowledge that we want to share with you concerning the two most important types of analyzing the markets out there that you can make use of to actually analyze the market and then find your trading opportunities, right? And these two major types of analyzing the market are basically fundamental analysis as well as technical analysis. So everything that you need to know concerning these two types of analysis, as well as some tips on how to make the most out of each of these, will be shared in this video. So make sure you watch throughout all the way to the end, and basically without wasting much of your time, let's dive straight into it right now. So starting off with the market analysis, right? So basically market analysis consists of two different major analyzing types, which is basically the fundamentals as well as the technicals, right? So we're about to break it down for you step by step and basically help you understand how you can incorporate both for your own benefit, because as a day trader, both these two types of analyzing is very important and very crucial for you to be profitable. When we talk about market analysis, it basically breaks down to those two main types for forex market traders, but then there are also other types out there, like the study of the return on investments, the profit reports, as well as company analysis, which apply to the stock markets, right? So those are not very necessary for us to understand as forex traders, but basically for other people like the stock market, you know, the crypto market traders, they basically need to understand those other types of market analysis, right? So starting off fundamentals, basically fundamental is basically anything that we can read and learn about, basically the news events, public speeches relating to the instruments that we want to trade or that we are speculating, and basically they're easy to understand but require one to have a deeper look into those reports to actually understand the next move or the impact that those news are going to have on that instrument or asset that we are trying to trade, right? So we use platforms like investing.com as well as Forex Factory to keep up with these events, because that is where they are announced and they happen usually on a weekly basis, sometimes monthly, and then some are scheduled on a quarterly basis, right? Now, quick tip for those using these platforms: basically only consider news release or events that are marked or highlighted as most important. As these platforms, they basically categorize this news event into three different groups, from the least to the most important, with the most important usually marked with a red mark, right? So you just need to filter out the least important and just focus on the most important ones, because these ones tend to have the most impact on the markets, and actually and they usually cause those huge moves in a matter of seconds when those news releases happen. So it is very crucial that you focus strictly on those so that you can make the most out of the fundamental analysis. Now, if you can touch a bit on technical analysis. Now, when it comes to technical analysis, we can actually refer to this as chart analysis as well. This is where we'll be looking at patterns, indicators, and other forms of analyzing that we can apply to the charts. So we're basically looking at the charts where we see visually what the price has been doing with the help of candlesticks, you know, line chart as well as the bars, right, and other different types. So now as a trader, it is important to know and apply both so that you can be profitable, as we said. So you can't really rely on just one form of this analysis, of these two analysis, to make your trade decisions. You need to consider both. So for example, the reason why you can't do this is, like, let's say for example, if the top companies in the NASDaq 100 index reports good outcomes and great achievements in their companies, we can expect some bullish movement on NASDaq, right? So if you are analyzing on the charts and then you're seeing some sells, then fundamentals are going to overpower those chart patterns that you're seeing and basically go against you, right? So for those who are not familiar with the NASDAQ, it is a market that reflects on the top 100 mostly tech companies in the US in one chart. So some of these companies have more weight on the price. Basically they have more influence on the price compared to others, and then some of these top companies that you need to keep watch on when you are focusing on NASDAQ is basically the likes of Apple, Microsoft, Amazon, Facebook, Alphabet, also known as Google, and a few more like Tesla and so on, right? So those are some of the big players that have the most influence on the NASDAQ price. Now the charts simply help us to keep track or summarize what each market is doing visually in the form of the common candlestick patterns that we see, or sometimes it can be the bar graph, line chart, and few more other not so common chart types found on platforms like TradingView, which is one of the most used chart analysis platforms. So it just depends on the platform that you're using. But on our famous MT4, basically we have three, right? So we have the candlesticks, we have the bars, as well as the line. So it's all up to you which one you prefer to use. Now, in most cases, investors in stock markets or crypto markets, they're not so much interested in technical analysis, but more so in the fundamentals behind these companies or these coins. For example, when an investor chooses to buy a Tesla stock simply because Tesla is releasing a new Tesla model, for example, which is projected to sell out fast due to high demand or high interest in the new model that the Tesla customers have, right? So this is something that may be of interest to the investors, and they're seeing some growth potential in the Tesla stock after the release of this new model, right? So, or maybe for cryptocurrencies, maybe a new crypto coin that just has been launched and maybe it's in the pre-sale phase, and basically you can buy in whilst it's still not having gone public, and basically in the pre-sale before it is launched on the markets. And usually investors would look at the clear roadmap that has been shown that shows how much value this cryptocurrency will bring into the market based on what other booming coins have done before. So maybe replicating the success of other coins, and then that makes it an investing worth type of cryptocurrency, right? So those are the types of things that these big investors will be looking at instead of technical analysis, whereas us as day traders would want to know both technical and fundamentals to keep track of where the price of the market is going and any possible news that may have a significant influence throughout the day or that trading week, right? So this is achieved through checking overall the trend of the market, as well as the important levels of where price have failed to break through or potentially pushing forward to break through, which we refer to as areas of support and resistance, as well as supply and demand, right? So these are some of the crucial levels that you need to keep track of in the market so that you can understand where price is potentially going to next. Now let's dive a little bit deeper into fundamental analysis. What exactly is fundamental analysis? So basically, fundamental analysis is a method of evaluating the value of an asset and analyzing the factors that could potentially influence its price, and that can be either positive or negative influence depending on the news that have been released on that asset. So this form of analysis is based on the real world events and their influence. Like for example, when Elon Musk goes on Twitter and tweets something positive about the Dogecoin, and a lot of people rush to buy it, hence pushing the price up. Therefore, the magnitude of the influence of the source of the news actually plays a big role on the influence that this news will have on the price of the market in question. But also financial statements and industry trends also contribute to this form of analysis. So it is therefore key to actually keep up with these reports that you find on the asset that you are trying to fundamentally analyze. As we have said before, fundamental analysis is one of the two major methods of market analysis, with the other one being technical analysis, whereby traders extract all the necessary information they need and to make their trade decisions straight off the charts, right? So that is the technical side of things. But whereas fundamentals, traders make use of external information from all other different sources, of which we've given you two examples of the most reliable sources to get this type of information, which is investing.com once again, as well as Forex Factory. And for those people who are into crypto markets, who are into trading crypto markets, you can also check crypto.com, which is very much similar, or actually a part of investing.com, but mostly just focused on cryptocurrencies. Actually just about crypto news. You can also check CoinMarketCap, which is another great platform to get the insights on different cryptocurrencies. So those are other places where you can get more information on different cryptocurrencies that you want to trade. Now, fundamental analysis can be broken further into two different types. So we have the top-down analysis, and basically, top-down analysis is pretty much similar to what we know as top-down analysis from the technical side of things, but a bit different, right? So we have top-down analysis as well as bottom-up analysis, right? So with the top-down analysis approach, it is a broader approach view on the economy, starting with the entire market before narrowing down into a sector. Then after narrowing down to a sector, you narrow down into an industry, and finally specifically focus on a specific company in that industry that you want to trade. So basically, when we say company, we're talking about the stock itself, right? So maybe that could be Tesla, that would be Facebook, or whatever the case may be. But the opposite, which is bottom-up analysis, is direct inverse of this top-down approach. of which you start analyzing with a specific stock and then widen out to consider all the factors that may have an impact on this price of the stock, right? So you start from the bottom going all the way up. That is the bottom up approach of fundamental analysis. So those are the two types that we have. And now tools that can be used to achieve these insights fundamentally vary depending on the asset that is being analyzed. For example, share traders may look into figures in a company's earning reports after taking a look into major economic events that have an impact on the price of the stock or market that you are trying to trade. Whereas forex traders may choose to assess figures released by central banks, for example, which gives insights into a country's state of economy. So all this analysis is to give traders a starting point into price forecasting, right? So it's just to help to give us the foundation of looking where the price could potentially be going to, right? So that is it's all about just putting everything together and seeing where the odds are for that market, whether it's more to be pushed to the upside or to the downside, right? Depending on the factors that we've looked into, right? The analysis that we've gotten on that specific market. So for forex analysis, the most common news released to look into includes things like interest rates, the NFP, employment rate, GDP, which is the gross domestic product. We have international trade and manufacturing reports outcomes, looking into the impact these have in the relation to the currency that you're trading, right? So when you go to investing.com or Forex Factory, basically the news that has been released, you will see that okay, this is the crypto, this is the market or the currency that this news will have an impact on, right? So you need to focus on pairs that have that currency that is, the news is being released on, right? But then it's not just about comparing the last report's outcomes to the new release data, but actually understanding the factors that have led to that outcome and how it will influence the price, as well as comparing it to the projections that had been made, the estimates that had been made, and how the new price, whether it has come out or above or below those different numbers that had been predicted to be the outcomes, right? So those are the things that you need to look at when you're looking at the reports and the outcomes of these numbers, right? So the calendar resources we shared earlier will help you to keep track and notify you of these events, as some are scheduled on a weekly basis, monthly basis, and a few even on a quarterly basis. So fundamentals are only published on a weekly basis at most, whereas technical analysis data is basically released every single second depending on the time frame that you're looking at, right? So there's really no need for you to go hunting for this fundamental release or the fundamental news concerning your currency that you're trading or market that you're trading. They are actually given out to you freely and easily accessible on the market, right? So a basic example of how we implement such reports is like when there are reports of great returns in the property investments, right, in South Africa, or best known as real estate dealings, right? So in the real estate market, internationals would want to have a piece of that deal. Basically, if they hear, okay, the real estate market is booming in South Africa, and then they want to have their share of that deal. They want to have that piece of that pizza or that pie, right? Therefore, they look to invest their money into South Africa. But let's say for an investor in the United States who wants to invest in South Africa and real estate market that is booming, cannot transfer his or her US dollars, their local currency into South Africa as an investment. So they, without exchanging them into South African rands, therefore creating a demand for the South African rand at the cost of the US dollar's value, meaning that the rand will actually become more expensive. It will gain more value over the United States dollar to buy, getting more expensive to buy due to the increased demand. So when there's increased demand, obviously the price will go up, right? Whilst the US dollar value will actually decrease due to many investors begging South African rand holders to take their US dollars, which means increased supply for the US dollars, right? So there'll be plenty supply of US dollars, meaning that the value will actually go down because they'll be hungry for that South African rand so that they can invest into the economy, meaning that the rand holders will be the one to set the price, right? Will be the ones to set the price, so they can set it higher so that they can just take the serious buyers of the rand. Now, unfortunately, it's not always this easy, as the big investors, the big boy investors will want to fool most traders into losing their money. Because remember, when one trader makes money from the markets, then that means the other trader is actually losing that money, right? So trading is an exchange of money from one hand to another. So manipulations can be expected from the big guys with the big bags, right? So big enough to change the market directions. And now we're speaking of the big banks in different nations, as well as big financial companies out there, right, that are trading in the market on a daily basis. Remember, there's over $6.6 trillion that is traded in the markets on a daily basis. So it's a lot of money that is exchanging hands on a daily basis, right? So more details on this major reports is what we are about to get into right now. So starting off with the interest rates, they are the major forex analysis indicator fundamentally on the fundamental side, and we focus on nominal or base interest, which is set by the central banks, as they are the ones who create the money, which is then borrowed by private banks at that interest rate that they have set, the base nominal rate, which is what we call the nominal or base rate, right? Base interest rate. Now, what follows this is what we call inflation, right? Inflation reports, right? So these news reflect on fluctuations in the cost of goods over a specific period of time. What exactly does it mean, though? Well, over a long period of time, the economy grows, the economy keeps on growing, and with that growth, so should the amount of money that is circulating in the economies, right? So when the economy grows, so should the amount of money in circulation, and that defines inflation. That is basically what inflation is. Every economy has what is considered a healthy inflation rate, which is about 2%. Now, I'm sure around this time you have seen some meme posts going around of pictures of cooking oil being priced over 94 rands, which is crazy, right? Over a 2-liter bottle of cooking oil, of which we are used to buying at less or an average price of 50 rand, which is basically, that's inflation, right, in price. Now, basically with inflation, cost of living increases, yet in most cases income from most companies or most businesses will still remain the same, right? Or at least increases at a much lower rate than the inflation on goods and services. So let's not even talk about petrol and diesel prices at the moment, because those are just going crazy through the roof right now, right? Now, too much inflation tips the balance between supply and demand in favor of supply. Now, this leads to the currency basically depreciating due to increased demand for the currency to get hold of the same goods or services, but the price has gone up, right? So it basically increases that demand for that for the currency. On the flip side, we have what we call the deflation, which is the opposite of inflation. During this period, the value of money increases whilst goods and services become more affordable or basically decrease in price. Now, moving further with these important major news reports, we have what we call GDP, right, which is the gross domestic product. The GDP is a measurement of all goods and services produced within an economy within a given period, and is believed to be the best indicator of the overall health of a nation or economy. Generally, GDP gives us an idea as to the health of the economy, whether the economy is growing or it's actually shrinking, giving us an idea of the strength of the nation's currency. As increased GDP is likely to have a positive effect on the currency's value. It gives us some insights onto the value of the nation's currency. Now, with that being said, let's move on to the next important report, which will be the job reports. So job reports, very, very important. Another indicator to whether the economy is actually growing, overheating, or is actually failing, right? So now these numbers are very much less predictive as the outcome varies month to month, right? You can never really predict this, as to many circumstances can cause loss of jobs or maybe creation of jobs throughout the month, right? So it becomes less predictive when it comes to the outcomes of these numbers. And also, it just looks beyond how many people are not employed in the country, but also like the salary levels of those people who are employed, as in, are they going up or are they going down, right? So that also adds on to the job reports as either decreasing or increasing based on the salaries as well. Now, next, moving on, we have what we call the PMI, which is the Purchasing Managers Index, right? Its purpose is to provide us with information on the current and future business conditions to the company decision makers, analysts, and investors. So that is the importance of the PMI, which is the Purchasing Managers Index. All of these major news releases are very crucial for our fundamental analysis, and we have to consider them all. Now, there are some pros and cons to this method of analyzing the fundamental side of analyzing, which includes how much time consuming this can be, because you have to go through these reports and analyze what is going on with this market, and get all the information and actually try to understand exactly what the outcome could be. Though this can help us to gather insightful data to make rational decisions on what position to take on the market, but it's very much time consuming. Now, the biggest downside to this is that the data actually takes a much longer term view on the market, right? So it's not like this news are going to have any effect on the market today or tomorrow, right? So it makes it hard for short-term investors to make decisions, making technical analysis the better option to go to when it comes to analyzing for the short-term investments, right? So like day trading. Now, with that being said, let's move on and talk more about the technical analysis type or approach to the market. Now, as we have said before, this can be referred to as chart analysis as well, which is the use of various chart types and other technical indicators to help us or to help one make a trading decision using past price data, also known as market action, or price action is what technical analyst tries to use to predict the next movement in price of that asset using this data, right? Now, the job of a technical analysis, like you as a day trader, is to look at the charts and spot any trading opportunities, making use of patterns. As the saying goes, history repeats itself, applies very much to the forex charts, as price moves in repeating patterns which can be easily spotted with practice. Of course, this will take time for you to get used to seeing these patterns, right? So I'm sure if you watched most of our videos, we speak about the W formations at the low of the day or the M formations at the high of the day. These are some of the patterns that we're talking about here, and basically this approach allows short-term investors to invest in the market with more confidence, knowing what could possibly happen in the next minute, in the next hour, day, or week, based on the current chart patterns that they are seeing, right? So technical analyst does not really have any interest in the company or asset that they are observing, but basically speculates and look for trading opportunities, not very much worried of what is really happening with the asset in the real world, right? So therefore one cannot really trade without any technical analysis. It is very crucial that you actually analyze the market, but you can get away with a little bit of fundamentals, right, without fully focus on the fundamentals, right? So there's also a saying that what the fundamentals are projecting is already projected in the charts, right? We're using the candlesticks, right? So technical analysis is basically like the king, right? Technical analysis is everything. So technical analysts basically observes things such as support and resistance levels, which are the levels in the market or on the charts used to identify those crucial points on the chart where a pause or a reversal of the market trend is likely to occur, which helps to decide on things like entries and exit positions when you enter this market, right? So there are different types of charts and techniques used for this approach, each with a unique purpose or use. For example, we have the line charts, the bar charts, the candlesticks, and then for indicators we have the moving average, we have the RSI, which is the relative strength index, and many more, right? So there's a lot of these indicators. We're actually going to expand a little bit more on that later in this video. So right now let's quickly expand on technical analysis basics, right? So the first is price, which is basically the most crucial and foundation of tech analysis, because without price on those charts you cannot do any analysis technically, right? So it's a basic and primary measure considered when taking this form of analysis, because it's all about the price action on the charts helps traders spot patterns that keep on repeating as the price of the asset moves up and down over a period of time, right? So allowing traders to come up with strategies to trade these markets. But at the same time, this price may actually seem very random, but you making use of things like trends will help a trader see the uniform in price movements, making price less random and a bit more predictable, right? So when you use the trend lines, when we use the moving averages and so forth, right? So though everything on the charts looks so mathematical, it simply is a visual representation of investors' emotions, market psychology, and reaction to these things over time that this market or investors are basically taking, right? Because remember, behind these scenes, there are actually people taking these trades, and that is projected or that is visually presented on the charts using these candlesticks, bars, and line chart graphs, right? So it's all about what these investors are taking, all the decisions that they make, making, the prices that they're selling or buying at, and then is visually represented on the screens using the charts. Now next, let's talk about the volume. After price, we talk about the volume, right? So this is very important because it's simply the number of shares or contracts traded of an asset over a period of time. Generally, we look at this on a daily basis, right? So when one sees increased volume, that's a sign to analyze that market for any trading opportunities, because where the people are, they basically are the opportunities, right? It means that if they're buying into that market, or if they're buying into the market, there must be something that is happening there, right? So allowing you to pick some opportunities, right? Remember what we said about potential, maybe let's say there's a real estate market that is booming in South Africa, and basically if you see increased volume, then you must know there's something that is happening, right? That increased interest in that currency means that there's something that the investors want in that nation, or there's just something happening, right? Volume shows a trader the strength of the price movement or trend by looking at the volume of shares being traded in that direction, which can be either up or down, right? So volume is expressed as a bar chart at the bottom of the financial chart below the price line, and by price line we're basically referring to the red and green bars on the main charts, right? So it's very simple to interpret these numbers as the higher the candle means increased volume, and basically vice versa. If the candles are going lower, it just means there's less volume in the markets, right? In addition to helping us confirm strength of trends and price movements, volume can be used to confirm chart patterns, right? So such as the triangle or the head and shoulder patterns, which are two of the most but many used chart patterns out there, right? So there's plenty of the chart patterns. Again, I'm going to repeat the WNM formation because those are some of the craziest chart trades that you can ever catch on the markets, right? They're just simple to see, and they simply work, right? So those are very crucial patterns that you can also look for. Okay, so now moving on to the trend. So with a trend, market can either be in an uptrend or you can be in a downtrend, but also sometimes we can see that the market is just consolidating, meaning there's no actual trend, but trading between two horizontal lines of different levels close to each other on the markets, right? So there's no overall direction, but the market is just going up and down within two horizontal levels, right? So trends have different lengths, which can be classified as either short-term, intermediate, or long-term trends based on the analysis and time frames that is being used to determine these trends, right? So it's important to understand time frames when using trends, as we have what we call trends in trends, meaning that on a higher time frame we could be on an uptrend, whilst a time frame lower than that could be actually showing us a downtrend, which overall will be just a minor or complex pullback on the higher time frame, which is still on a bullish movement, right? So waiting to continue that uptrend. So it is very crucial that you understand your time frames in regards to the trend that you are looking at, right? So don't be fooled by the lower time frame, minor trend when you're actually seeing the overall trend on the higher time frame, right? With that being said, now let's talk about momentum, right? So most used indicators for this is actually the RSI, which is the relative strength index. It basically values the price of an asset between 0 and 100 to determine whether the asset is overbought or oversold, generally on a daily basis, but it also applies to any time frame, right? So when it's overbought, it just means there's just too many buyers in the market and the price is overpriced, it's in the premium price to sell, right? And then when it's oversold, it's basically oversold. Basically means the market is falling down to a level of 0, and in this case we are looking to actually buy, right? It's at the discounted price where potentially investors could actually go up from there, right? So it's not always guaranteed, but then it can help you understand with what you other analysis that you have going on, right? So it's like sort of confirmation that you can make use of to make your trading decisions. Then we have what we call the support and resistance. So these are the kings of analysis, right? So we examine these levels to see the important levels in the market whereby price will potentially turn around or break and continue the current trend that the market is in, right? So these levels are created by the asset's price, previous lows for support, and then previous highs is what we look for when we are plotting the levels of resistance of this charts, right? So this helps us to see whether the market is in a bullish or bearish trend using these highs or lows and plotting the levels, right? These are some of the simplest concepts to understand, but yet can help you be very much profitable in the forex market. Now, support represents a price where the demand for an asset is high enough to typically prevent the price from dipping below that line, right? So basically the price, the discounted price to buy into the market, as we spoke about in the previous video. If you haven't watched that, I would highly recommend that you go and take a look at that video to understand what we spoke about when it comes to a premium and discounted prices to buy into the market. Now, inversely, we have resistance, right? So resistance represents the point where sellers of an asset will come in and dump all their trades, right? So keeping the asset price from moving above a higher price from that point. Again, that will be our premium price, as explained in the previous video. Now, depending on the time of day or trading sessions that we're currently in during that time, these levels will be respected accordingly. So sessions with more trading volume will most probably, in most cases, lead to the breakout of these levels, whereas when there's low trading volumes in the market, these levels are respected as there is no enough momentum to actually push price to the next level, either to the downside or to the upside of these levels, right? So they're extremely important to help us identify trends and where possible reversals can happen, making them key concept that we need to understand, right? So we have many videos on this channel showing you how we plot these levels here, day and night forex. So be sure to watch those for reference in terms of how to plot the support and resistance levels. And then we have what we call the indicators and oscillators, right? So this is what most people rely on for technical analysis, just this fully. And basically, they are mathematically set to analyze price and give out possible buy or sell signals. Indicators simply indicate that is very key for you to understand. They interpret and help us to analyze the market, right? So give us better insights of what the price could do next. Now, some of these indicators are also known as oscillators, meaning tools that function by showing the short-term overbought or oversold conditions of a market and are typically bound to in a certain range, right? So like what we spoke about the RSI from 0 to 100, it will basically give us on that scale, right? And that is what we mean by oscillators, right? Being bound in a range. Okay, so to quickly summarize this video, we took a look at fundamental analysis, which is understanding the patterns in a company's financial performance, then try to predict the future performance using those financial statements. And then we spoke about technical analysis, which is the understanding of patterns in a company's share price or asset price using the help of technical charts. Then we look for different patterns, assuming that these historical patterns in the price will repeat again in the near future. As we said, history repeats itself in the forex market, right? So that is how we would predict from the technical side of things. So that's all that we have for you in this video. Hope you got a ton of value out of this information that we've put together for you. So don't forget to leave a comment down below. If you have any questions or suggestions for the next video or topic, just leave them in the comments. And remember, we answer all questions in the comments section. So that's your opportunity to get your question answered as well. You can also subscribe for more videos that are definitely coming very soon, and also like and share this with friends and family so we can all eat from understanding the ins and out of this massive market, right? So also follow us on our social media for more frequent uploads or updates from our Instagram, Facebook pages. So all the links are down below in the description. Once again, thank you for watching this video all the way to the end, and we'll be seeing you on the next one.